Good morning, guys. Another fantastic day today, Sunday. Welcome to another Traders Club weekly preview. We're going to be looking today at cable. So we're going to look at sterling dollar. We're going to be taking a look at euro yen. I think I really want to cover the yen, but I'm going to start with cable, right? Because obviously we've been looking at cable and talking about cable for quite a while, and obviously as traders that like to trade value and also like to consider where price is out of value, then this should be quite interesting. Now, for obviously those of you guys who haven't seen the other videos and you haven't actually seen me talk about value areas and how we can take advantage of trading out of value and within value, well, the idea of trading value is a really simple concept. It covers all aspects of business. Now, if you from the perspective of a day trader, well, you have a forced decision to make every time you're in the market, because your horizon is very short. If you're a day trader, you're in the market, you know that you're not going to hold any inventory past that specific day. Well, of course, if you're a professional day trader, that is, I mean, these guys, professional day trader, you don't really want to be paying swaps or any of that stuff. It's, you know, no points, it's just additional cost. Right now, if you're a day trader, you're looking to be in and out of the market, so which means that you have to sell when the market's at a high that is fair for you, and you have to buy when the market's at a low that is fair for you. And that's the idea, or the concept around fair value, or trading within a value area zone. Now, this is true for a lot of markets, even more true now for the futures market. Now, the other aspect of it is if you are a long-term wholesaler or you're a commercial dealer, then you only want to take advantage of the market when the market is considerably out of value, right? So I mean, you would hear things like, they say, well, if you, for example, if you're a commercial hedger and the market is incredibly long, you start to feel a bit bearish, and you kind of want to protect yourself, so you try and hedge for any kind of violent reversal per se in the market. So a hedger, for example, will be always looking ahead at the future and thinking, if prices are rising and they're getting a bit expensive, if I'm doing business in a foreign currency, for example, I want to make sure that obviously I'm not a victim of currency risk, i.e. currency fluctuations. So this is some of the things you consider as a commercial kind of enterprise, or a commercial kind of wholesaler, or a big mover of money. So this is why we kind of try and divide the markets into commercial, and we divide them into that sort of retail aspect, which obviously involves a lot of the day trader. So commercials are the guys who like to move the market, put it that way. So these are the guys these are big kind of other time frame type buyers and sellers. These guys, obviously, they are the guys who move the market. So when you see market reactions at low points, or you see market reactions at high points and move the market tremendously, I mean, these are guys who've obviously perceived that the market is considerably out of value, and it's a good time to obviously be short this specific market. So that's the idea around sort of trading in and out of value. Now, a lot of traders would always tell you, I love trading the day time frame because it's like really it's not so much noise involved, and well, this is the idea. If you're a day trader, you have to deal with the noise, because really all that noise is people deciding when they want to come in and out of the market, and that's what's creating the noise. Whilst obviously when you're looking at, you're getting a lot more reaction time, because you're thinking more or less like the other time frame guy, wherein your horizon's a lot longer, so you can afford to kind of sit there and wait for the market to drop and then pick it when you think obviously this is a good time. It's completely out of kilter, and it's basically it's so cheap that I got to buy it now. In a nutshell, like this is like a bargain, and all markets get to that stage where they are technically bargains. And I think this is the concept that a lot of people wrestle with, is they don't quite know, like, where they sit in this fence. You got a guy who wants to day trade, but he wants to take on a long term. You got to kind of decide, right? If you're going to act like a commercial, then you have to have a plan acting like a commercial, and if you're going to day trade, then you got to think like a day trader. So there's obviously completely different philosophies for both sides of the fence. So, well, this is the idea of markets when they come out of value and they find value again, because always trying to locate equilibrium. At some point, buyers and sellers are going to be active within a specific price level because they think it's fair. So they're going to trade, and this is great for trade facilitation, because if you think that you're trying to liquidate a position, you want to be able to liquidate it in a zone where you're going to get the best possible price. So if the market drops and it comes, say for example, we're sitting here and it's dropping and it's entered fair value, well, it's bouncing around. So this is normally a good time where traders can exit their position with very little volatility and they can get the most for their money, right? And this is obviously the idea around it. So there are these aspects are so important when you're trading markets, is to understand, you know, what the market is doing, right? And all that's happening at these levels is we're getting better trade facilitation. So obviously buyers and sellers are much more active, and there tends to be a lot of volume trading within these prices. So there's a lot more time spent in this area as well. So these are the factors, obviously, that indicate that there's a lot of trade facilitation going on, right? So it's obviously not the market just completely declining. Obviously, as the commercials are moving it towards value or towards an area of value, it's also about trade facilitation. So these guys who are participating here are playing a major role between the seller here and the buyer down here, right? Because without this, there's just not enough liquidity, right? So there would just not, because these guys, the long-term seller and the long-term buyer, don't trade directly with each other because of the time horizon. So they take advantage of the day trading that's taking place, so they can get better trade facilitation. So as the market moves to its destination, the day traders are fulfilling a very vital role of exchange, right? So it's the same if you're in the futures floor, whether it's in Chicago or wherever, and you're trying to, you know, trade on the floor. It's the same thing. The guys who are the floor traders are facilitating trade between the other time frame buyer and the other time frame seller. So in essence, the big guys who move the market, and those guys obviously are collecting daily inventory and being able to sell to these other guys who are on the opposite end of the market. So it's a really nice, interesting, complex kind of machine that takes place in the market. So, you know, it's just understanding this process, and then you quickly understand how you can participate, or what side of the fence you want to sit on. And obviously you've got to remember, obviously, the commercials, because of their horizon, they have more capital. So again, it's not really a big deal like holding a position. So you have to obviously decide whether you want to be a position trader or you want to be a day trader, in the sense that obviously your mentality is a little bit different, your emotional makeup and psyche is also different, because you have to remember, of course, you are not a commercial. But anyway, onto the charts. You know, I just thought that would be very interesting to kind of bring that into perspective and understand why I'm looking at the markets in the way I'm looking at the markets. Of course, there are other strategic elements, and of course, if you check out our live room at the Traders Club, then of course we can talk a lot more about the deeper ways we strategize. But for now, just look at everything from a very basic point of view. So as we can see, the market has been consistently finding value at lower levels. So we can see these little boxes denote where the market was a bit rangy for simplicity reasons. And what we've managed to do is allocate some support and resistance against the value area highs and lows, right? So this is kind of a crude way of doing it, put it that way. But let's roll this back a little bit. So what's happened here right now? So I want us to pay specific attention to these sort of zones. So let me just put in another line here. There we go. So these areas, as you can see, they form some quite strong support and resistance. Now, obviously, think of these like elastic bands. The market can go through them, so it's not like a solid wall. So we can bounce around them. So for us as traders, what we want to understand is the reaction. Now, usually, as we pushed into this value area, right? So we came out of this, and so we were driving down. So when we traded into it, there was a 70% probability we were going to trade the entire value area, which we did almost, and then reversed, came back down and broke that level. And there was a very good chance we were going to test at the very least the next value area, which was down here, which we did. We tested and the market rejected those prices because it understands that if we get acceptance in here, then this was a likely trading range. So if the market feels that we don't want these prices, we reject them, then it gets moved back up. And this is usually by a very large entity who has spotted that this market is trading incredibly out of value, which was this, and is now ready to buy it to return it to value. And this is exactly what's happened. The market's been bought up, it has been returned to value, and there was a 70% probability again we're going to trade the entire length. So as a day trader, these are the opportunities we look to take advantage of, and obviously we did. We broke it slightly and there was a rejection, so we came to test this value area. Market was rejected and it stood there, couldn't get in, and then pulled back down into the bottom. Once we broke back in, there was a 70% probability we're going to trade back down to this value area. Now we've broken this, we came very close to this value area. Market immediately reacted, which is a very strong sign of strength, and it pushed it back into value. Right, now comes the chance. There's a 70% probability that we could trade again the entire length of the value area up to 158.22. Now if the market does get rejected at this level, so if we come in and we get rejected and we break out, then there is a very good chance we're going to come back to test 152.69. So obviously at this point it's about risk. It's about assessing your risk. Now if you feel you want to be long on sterling, then you have to understand that this is not a solid wall, it's an elastic band. So you have to decide where you want to accommodate your risk. So what's good for you against what your potential gain would be, because there's no guarantee we're going to break 158.22. So we have to watch for the reaction. As a day trader, this is the advantage we want to see. If we're looking now, if we're thinking more from the point of view of a commercial, if we broke out of this, we'll be looking for weakness within as we pull into this value area, because that will be a very good sign that we're going to sell this market back down again. So the key here is to kind of observe the market behavior as we move in and out of value. So now we're trading within value, which is fine. So obviously traders are happy with these levels. The key is we're seeing some weakness here. So, but the key is, are we getting a rejection? So is the market saying, I don't like this price, are we going to break out? Now this is our support, right? So 155.36 is our key support, and it is also sitting on a moving average. So this is our key support, and this is what we're looking at. So if this was to get violated, then there is a good chance that we could come in to test these lows. So it will be a fantastic opportunity. But for now, we don't know that. So the reality is that if we also trade into this level and then we get a massive reaction and the market cannot break, then there's a very good chance we're going to go. And it will make for some nice risk reward as well if we were going to actually trade off that level. So from my point of view, I'm looking at sterling and I'm thinking we are potentially bullish, right? So we are potentially going to see a bull move in sterling. So I'm still quite bullish about where sterling could be in the sort of near term. So there's a very good chance we could trade up. But I'm going to be conservative about that view and keep watching. Ideally, the clues come, do we break 155.36 or do we hold? If we hold, then we will likely test 158.22. Well, good luck traders. I hope you can nail this one. But if we do some cross-market analysis, where are we? On the weekly chart, we had some rejection as we pulled higher and then we pulled lower. So from a weekly point of view, the market is saying that we could potentially trade back down. But if we look at this candle here, we did actually trade considerably into the base of this value area. So we have some overlap in value at the moment. So it makes it a little bit more confusing. But this becomes our support, which is 152.67, 152.70, right? Which is why I said from the daily, it's important that we wait for the reaction. Because then on the daily, if we go back to the daily, again, if we break 155.36, that opens that sort of level for us, 152.64. Yeah. And if we go to the weekly, we can see that it's not that far off. 152.70 and 64 is about here. So it's almost dead on. So when we're considering that, and there's a lot of support down this level on the bigger frame, so there's a good probability here on the short side as well. But we want to wait for the reaction. Now we're trading within value. If the acceptance continues, then we trade lower. If it doesn't continue, then we should likely break up into 157.47 and yonder. And would the market get held down again? We'll have to see. Fibonacci's play a role because as we can see, there's clearly an order cluster here, and the 50% was just above. And once the market got held and returned into value, well, we'd have to see how things progress into the coming weeks. So generally, this market has been quite weak on both sides. From both buyers and sellers, there's been a lot of indecision. I don't know why that is for cable, but there has been clearly a lot of doubt as to where the market goes next. So it will be a strong move when it does happen. The biggest volume at the moment has been one of a climatic nature. So again, as the market was rising, we're seeing increasing spreads, which is never usually a good sign. It means that the market's probably going to weaken as we approach the top. We've seen a fall in volume. So generally, this market is actually spitting out to us that on the weekly frame, we're pretty bearish. So on the medium term, we're quite bearish. Near term, still quite bullish. So it really depends. And that this indecision in the market means that we should sit it out and get more confirmation. If we're looking at the monthly, it's also giving us an idea that on the long term, we could be quite bearish because we've seen the rally has been quite weak. We've seen a lot of climatic kind of volume as we stayed above this sort of trend line. So the key is that if we start to push back down again, then long term we could be pretty bearish on sterling. But look where we're sitting. So yeah, you know, we'll see. If we punch in quickly into euro yen, I was trying to get this review into about 15 minutes, but I don't think it's going to be possible. But yeah, I'll do my best to keep it short and sweet. But yeah, here we can see obviously euro yen. We've had some rise in value in favor of the euro, and then we kind of topped out, and we're kind of trading here. So we've traded down into value, bounced off again, 50% retracement played a role, traded back up, found that resistance, and now we're trading back down. So the likely scenario is we're going to trade back into, say, maybe 133, 133.05. Now, if the market does not respond, this is the classic, for those traders who are looking, we'd see a classic head and shoulders at the moment. Now, if this plays out and we do actually damage that neckline, then we could potentially trade, come in to test 131. And if we come into this value area and gain acceptance, we could trade down to 126. Right, so if we just put a line here, 126.80, 81, that sort of area. So this is quite interesting on euro yen, and just one to keep an eye on really. And if we're going to look at some cross time frame stuff, so let's zoom out there again, we can see obviously it's quite high. We had some rejection at that value area, and now we're pushing lower, and that's 126.88. So again, there's a huge sign there, and that's the 61.8 extension as well. There was no stopping the possibility that we could see eventually the euro trade down to 115 against the yen. Right, there is no reason why this shouldn't really happen. You know, market conditions, you can't predict them, but I've become increasingly bearish on the euro, especially against the yen, and I've been quite bullish on the yen. I think the yen is going to surprise in the next couple of weeks. But yeah, so these are the sort of levels. So guys, like I'm saying, we are talking here purely about trading value. We're thinking like proper traders right now. So the reality is that this is where we sit at the moment, and but there you go. Well guys, I hope you enjoyed this session. I hope you like the analysis. You guys should leave comments, whatever, it's good. And ultimately I look forward to our next Traders Club weekly. Don't forget to check us out at the TradersClub.London, and you can check out some of our live trading room as well, which is on the 3rd of August. So look forward to seeing you guys. Well, have a great weekend, and catch you all later.